Hi there. If you're a small business owner, I know you're already juggling a million things, managing clients, helping up with operations, and making sure everything runs smoothly. Tracking receipts, I know that's probably not at the top of your list. And honestly, I get it. But when it comes to tax deductions, having proper documentation is still the best way to protect yourself. A recent case in the Tax Code of Canada, which is Dimou versus the King in 2024, it raised an interesting question. Can you still claim business expenses even if you don't have receipts? Surprisingly, in this case, the answer is sometimes yes. But before we get into what happened, let me quickly introduce myself. I'm Aman. I'm a CPA based in Canada. I work with small business owners to help them manage their finances, stay compliant, and save money on taxes. If you're running a small business, my goal is to give you practical tips that make tax planning easier. Now, let's talk about this case. Because it might sound like a game changer, but it's actually more of an exception than the rule. What happened in this case? Miss Dimou, a small business owner, had not filed tax returns for 3 years. The Canada Revenue Agency stepped in, assessed her income, and denied many of her business deductions because she did not have receipts. But the court actually allowed part of her claim, specifically her subcontractor expenses. She didn't have receipts, but she provided oral testimony explaining that she had hired subcontractors. She also gave a client statement confirming that subcontractors did the work. She also said that there is a legal precedent from a past case, which is Stewart versus the Queen, where the court ruled that subcontractor expenses could be estimated when backed by reasonable evidence. You see, in this case, the court found this logical and allowed 50% of her claimed subcontractor expenses despite the missing receipts. But here's where she failed. She tried to claim other business expenses like supplies using only credit card statements. You see, the court denied these expenses because credit card statements show a transaction but not what was purchased or whether it was for business use or not. She did not try to get replacement receipts or retrieve digital records as well. Her records were disorganized and lacked clear details. So, while the court was flexible in one area, it wasn't willing to make exceptions for everything else. And that's where the lesson comes in. What can you learn from this? I completely understand that keeping every receipt is not practical and sometimes it's not easy. But running a business is demanding and paperwork isn't always the first priority for many business owners. But here's what this case tells us. Number one, you can claim expenses without receipts, but it's not easy. The CRA expects strong, credible proof if receipts are missing. Alternative evidence like oral testimony, written records, or witness confirmation may work, but it has to be detailed and logical. If your explanation is vague or inconsistent, it won't hold up. You see, credit card statements alone won't save you. The CRA needs to see what was purchased and why it was a business expense. If you lose receipts, try to get replacements from vendors or find email confirmation for online purchases. If you hire subcontractors, document it properly. Keep contracts, invoices, and payment records. If you pay in cash, get a signed receipt. Save emails or messages confirming the work arrangement. You see, even though receipts are not the only form of proof, they are still the easiest and most reliable way to defend your tax deductions with the Canada Revenue Agency. Now, you might ask how to make receipts easier to manage. I know Receipts can pile up fast, but with a little organization, they don't have to be a headache. Here are few simple ways to stay on top of them. Keep all receipts. Even a simple folder or digital file can save you stress later. Make quick notes on receipts. Who was there? What was the business purpose? Just a few seconds can make a big difference in your record keeping. Scan and store them digitally. The CRA accepts digital copies and paper receipts fade over time. Use an app. Tools like Dext, HubDoc, or even QuickBooks Scan automatically store receipts for you. Avoid cash payments. You see, credit or debit cards create an automatic paper trail, so they are better. Don't rely only on bank statements. They don't show enough detail for tax purposes. Think of receipts as insurance for tax return. If the CRA ever questions your deductions, you will be glad you kept them. Final thoughts. You see, this case is a reminder that while receipts are not the only way to prove expenses, they are still the safest and the easiest way. Courts might allow some exceptions, but the CRA expects clear documentation. If you're a small business owner, I highly recommend making receipt tracking part of your routine. It does not have to be complicated, but having organized receipts and records can save you money and stress in the long run. Let me know your thoughts. Should the CRA be more flexible when receipts go missing, or they should be more strict? If you found this helpful, I'd love if you subscribed for more tax saving strategies and business tips. Stay organized and stay tax smart. Until next time, bye.